following is an update and technical analysis on natural gas futures based upon the 240-minute interval, in which I will additionally zoom out to the outer layers of the bigger picture within the monthly time frame. And on the 10th of January 2024, we were trading spot price 2.999, and I had made it adamantly clear that long traders and or bull traders needed to defend this primary minor reactionary uptrend line, really to avoid any sort of additional breakdown sell signal where short sellers and or bear traders were salivating at the mouth for a nice clean objective short trade entry and an add-on to their existing position, in which they took off the 786 fibs retracement, call it 3.291 price resistance, and that was rejected impulsively, consolidated briefly, and was once again rejected violently on a prolonged move in the defense of the 50% fibs retracement and the minor uptrend line, call it a dual transitioning point of price support. Had this primary reactionary uptrend line, which was really needed at all costs to be defended by any leveraged long traders and or bull traders. And once again, short sellers, bear traders, they wanted to see a solid 240-minute infused candle, red candle close below, in correlation of the 236 fibs retracement and the 2.60 price support. And that was a very big key telling price support level that needed to be defended by long traders. If not, short sellers would take a ton of advantage in the cascading stops and or margin calls to go off. And here's the update. And the entirety of that trade upon that initial breakdown and or back test and really to the button was rejected impulsively right off that key pivotal transition point, broke down from the primary, not the minor reactionary uptrend line, and had a nice clean breakdown, solid infused candle close below that key inflection point, which was the primary reactionary uptrend line off the mid-December reactionary lows down here, and a cascade of stops, margin calls went off, and the entirety of that trade was good for a 30.6% crash to the downside. So not only did long traders and or bull traders right off this initial video catch this 30% uprise, caught the additional big breakdown sell signal, had a strong counter-trend snapback rally with equal highs where we put in negative and bearish divergences, really constructed amongst all four technical momentum indicators, called them exaggerated negative and bearish divergences with equal reactionary price action highs. And that was rejected very violently to the downside, broke down, put in that back test and or retest, and was off to the races, completely gapped down below this inflection point. And what was so significant was the velocity of the drop in the gap down, only to be completely bounced to the upside. This 211 price support that I have been hyping up off the monthly interval for quite some time now. Post that video at the very end. Might have been 3 videos below the previous natural gas technical analysis segments that I've been recording, and that was put in a beautiful double bottom here, especially for an active and or day trader. It netted you some pretty hefty gains to the upside if and when you caught some of these key transition points for 1 to 3% moves in a single day. Make no mistake about it, we have an unfilled and unchecked gap up above. So again, this could mark a potential double bottom. We are trading really in no man's land right now. So if you wanted to come back and we had a retest of the 211 price monthly price support level, would again offer a great risk reward long trade setup to the upside, setting some stops maybe below the previous lows here for a potential move to the upside, at least on a backfill and a recoverage and a retest at the top of the gap for 20% in gains to the upside. Call it a very aggressive and telling move if and when some of these key levels are breached. If and when we take the 211 price support level out, which is zoomed out here off the monthly interval, and I had made it clear in one of the previous videos that we were staring down a potential monthly time frame head and shoulder classic looking top, and here is the right shoulder where we were rejected amongst the 50-month moving average in correlation of the 786 fibs retracement off the 240-minute interval, and that was rejected once again very impulsively here. We were back testing off the 211. We have the 194. These are just generational price support levels dating back all the way until the early 90s. Just a ton of reactionary highs and lows. And this is just a very telling price support levels which could be knocked and or re-challenged, retested, where the neckline could be the 194 line in the sand for long traders and or bull traders. I believe that is the biggest key inflection point, multi-generational level. It's very psychological level if and when we were to go on to retest and re-challenge that level, and short sellers, bear traders take that level out, the solid monthly infused candle close below, we already have pure technical monthly interval damage in all 3-4 technical momentum indicators crashing below their zero line thresholds. That would only overslide, and do not underestimate how oversold conditions can get off the monthly time frame on a much larger crash to come, especially if we take the 194 level out. I would only expect and imagine the stops and or margin calls to go off if that level was breached on a re-challenging of the 1611 price support level. While there isn't a clear trade opportunity in natural gas at the moment, as it trades in a neutral zone and or no man's land, I'll provide updates if I identify noteworthy conditions for trade setup in either direction for the Widowmaker commodity. The recent weekly inventory reports from the U.S. Energy Department revealed a smaller than anticipated decline in natural gas stocks, coupled with forecasts indicating reduced weather-driven demand later in January, just exerted downward fundamental pressure on natural gas futures, resulting in a substantial week after week loss.